Today, I'm going to show you how to increase your credit score. I want to help you understand everything about credit scores and how the average person can reach that coveted 800 plus score quickly and realistically. Be sure to watch to the end to learn what you need to do starting today to improve and maintain your maximum FICO score. Be sure and like, subscribe, and share this information with anyone you know who may benefit from financial coaching. Now, what is a FICO score? To begin, let's understand what a FICO score is and the variables that influence it. Simply put, a FICO score is a credit score that is almost universally used by everyone extending credit to qualify the applicant requesting any type of credit. You hear a lot about credit scores and their importance. So here's a breakdown of what goes into that rating. 35% of the score is based on payment history. This reflects how well you pay off your credit, and additional 30% is attributed to the amount of debt credit utilization. This shows how much you owe. Then 15% comes from the length of credit history. This refers to how long you've been building credit. Additionally, another 10% reviews the new credit. This considers how many new credit lines you've opened and when. And lastly, 10% is based upon the credit mix. This includes the variety of credit you have, such as auto loans, credit cards, and home mortgages. Most of these factors are self-explanatory. Payment history deals with your repayment habits. The amount of debt shows how much you owe, and the length of credit history tracks the duration of your credit use. New credit evaluates how often you open new accounts, and the credit mix looks at the different types of credit you manage. Now let's discuss 7 steps that, if you follow, can improve your credit score. Number 1, start building credit history. If you don't have any credit history or low credit score and can't get approved for a standard credit card, consider applying for a secured credit card. Companies like Discover offer secured cards which require a security deposit to open. This deposit acts as your credit limit. Secured cards are great for beginners with no credit history and help you start building credit. As you build your credit with this card, your score will improve over time. Number 2, pay off your balance in full. Paying off your credit cards in full is crucial for raising your credit score. It's much easier now with AutoPay, a service that most credit card companies offer to automatically pay off your balances. The other thing you should do is mark your calendar with the due dates of all your payments and make sure that they are paid a day or two in advance. That way you will never be dinged on your credit score due to a late payment. If your credit card company doesn't offer AutoPay, you should seriously consider switching, as missing or late payments can hurt your credit score and result in penalty fees. Make sure to pay off your credit cards by the end of each billing cycle. Payment history accounts for 35% of your credit score, so it's essential to avoid missing payments. Number 3, build multiple lines of credit. As you build your credit history and pay your bills on time, focus on obtaining multiple credit cards or lines of credit. When I counsel individuals, I'm amazed that many do not know about lines of credit from your bank or other financial institution. In order to get a good line of credit, you may need to begin much in the same way as getting a credit card, by using a guaranteed line of credit, by depositing the amount of the credit line. After paying this line of credit for a certain period of time, most companies will allow you to get a refund on that deposit so that you can use it for yourself. Keep that line open for your use. Just having the line of credit shows your strength as a borrower and improves your score. Having multiple credit cards can also help in your credit score enhancer. This is one of the best ways to increase your credit score. For example, if you have one credit card that has a $1,500 limit and you get another card with a $3,000 limit, you now have a limit of $4,500. More credit cards also help maintain a low credit utilization ratio, which we'll discuss later. Diversifying your credit by adding auto loans, mortgages, or small loans can also benefit your credit score, showing that you manage various types of credit responsibly. Now, number 4, be cautious when applying for new credit. Applying for new credit too frequently can negatively impact your score. Each time you apply, even at the local hardware store for a card with them, it triggers what is known as a hard inquiry, which can lower your credit score temporarily. Multiple inquiries in a short period might make you appear as a risky borrower. If you're planning to buy a car or house, avoid applying for new credit cards right before. Instead, wait until you have secured your major loan and closed, as your credit score influences the interest rate on those loans. I have seen over and over people who were trying to buy a home, had everything approved, then went out and bought a car or started buying furniture before closing on the home. Then, wham, the lender denied the loan because of the recent credit purchases. Number 5, keep your credit utilization ratio low. Maintain a credit utilization ratio, or in other words, the percentage of your credit you are using. Keep it under 30%, or even better, under 10%. This means you should not use more than 30% of your total credit limit before paying it off. For instance, if you have a $1,000 credit limit, try to keep the balance under $100. You can achieve this by getting more credit cards, requesting higher credit limits, spreading charges across different cards, or making multiple payments each month. Keeping your utilization below 10% demonstrates responsible borrowing and helps improve your score. Remember, you are trying to prove to the credit agencies that you are a responsible borrower. Use self-control in your spending habits and prove your creditworthiness to the world and to yourself. Number 6, check your credit reports for errors. Regularly check your credit reports for errors using a free resource like annualcreditreport.com. And many banks offer you as their client a free credit report once a year. Mistakes on your credit report can include missing accounts, duplicate entries, or incorrect information about closed accounts. Such errors can negatively impact your score. Dispute any inaccuracies with the credit bureau and the entity that provided the incorrect information. If you challenge anything on the report, the agency or the entity reporting the information must respond generally within 30 days or retract the information. Correcting errors can lead to a significant boost in your credit score. Most people have no idea how many mistakes there may be on their credit report and never get the benefit of cleaning the report up and thus improving their score. Number 7, request a credit limit increase. Lastly, consider asking your credit card company for a credit limit increase. This is a simple yet often overlooked strategy. As you build a positive history with your card issuer, it becomes easier to request and receive a limit increase. Applying this strategy to the card you use most often can help improve your credit utilization ratio and overall credit score. Now, in conclusion, these are 7 effective steps to help you reach that coveted 800 plus credit score. Credit is crucial for borrowing money and leveraging financial opportunities. So it's worth learning and mastering these strategies. Save this video for future reference and apply these tips to improve your credit score. If you found this video helpful, please share it with a friend, like and subscribe for more content on personal finance, investing, and having a more fulfilling life. Remember that as we share good into the world will always repay us with more good back to us. Thanks for watching, and I'll see you in the next video.